Next one up here, Stephanie Link buys more Apple. This should be interesting.
Another committee member, and it's Apple, which has had no momentum, to say the least. And today, in a market in which you're getting a bounce in Nvidia and Microsoft and Meta and Amazon and Tesla and Alphabet and AMD and Uber and Costco and a lot of these big momentum moves, Apple's red. And yet you've bought a good amount more. You've added substantially to it, you say, which is now a 5% position. Talk to us.
Yeah, and it held up better than the big six, if you will, over the last couple of days. This is not a Mag 7 play at all. This is a stock that's down 13% from its highs. We know that the numbers have come down for the April quarter. We know that already. We know that China is weak and continues to be down double digits. But I do think that the April quarter will be better than expected. I think services will continue to grow double digits. I do think that the earnings picture will be double digits. Margins will continue to be a bright spot.
So I wanted to pull up for you guys the estimates here for Apple for next quarter. 151 expected. That is down about 1% year over year EPS wise, and then revenue down 4% for the company. So, maybe she's onto something about a potential beat. But yeah, if they miss that, it's going to be pretty embarrassing because you already expected 4% down.
Margins will continue to be a bright spot. iPhones are not going to be a bright spot, but I'm not buying it for that. I'm buying it because the stock is down a lot. It's trading at 26 times revised numbers. Historically, it's traded at 36 times, so I think it's actually a bargain. April quarter, I think you're going to get a buyback, a new one. Maybe it's $90 billion. They could certainly do more. And then in June, we get WWDC. We'll hear a little bit about AI and what that means for iPhone 16 and the pricing power that they're going to have. So I've been underweight this name for a long time, and I'm still underweight because it's 7% on my bench. But I do think it's an opportunity.
This is always sort of viewed as what you mentioned, the buyback being a bit of a backstop, if you will, right? Because they buy back more shares than anybody else.
Sure.
So they're going to, ideally take advantage of what's happened to that stock. But something's peculiar, though, when this thing just can't get out of its own way lately. And what gives you the confidence that it's going to be able to do that?
Well, I don't have the confidence that it's going to start working tomorrow, but I do think that this is an opportunity for the longer term. AI, even if they make some good announcements in the summertime, it's going to take a long time for that to kind of go through and filter into the numbers.
I'll tell you what's actually going on. They just don't know where the growth is coming from, in the future. And outside of a next hit iPhone, it's hard for people to see where the growth opportunity is in this one because Vision Pro is just not it in terms of that major growth, at least anytime soon, until they get a price point that is acceptable for most folks.
Just think right now, it's so down and out. It's so really not liked at this point in time, right?
That's an understatement, right?
You've had a lot of downgrades, and that's fine. I understand why there would be downgrades. I'm trying to take the other side of that and trying to think a little bit longer term because I still believe in this company and this story and the products.
Okay.
Yeah, technically it's always a fine buy, but it's just like, are you going to make much money in there versus a lot of other opportunities? Is AI hype overblown?
Wondering whether, if there is a breakdown in quality or momentum, or both, the chips could be the most vulnerable. And maybe you're seeing some signs of that this week. Week-to-date losses in the semis. Marvell's down 9%, AMD's down 5.5%, and this is outside NVIDIA, obviously. Micron's down 4%, Broadcom's down 3.5%. Broadcom, quality momentum, that's been on the list. Christina Partsinevelos is here at Post 9 to help us look at this. Is that how you're thinking about this? Like if you do have a bigger breakdown, your beat, your space is going to be the place to look, perhaps.
Oh, 100%. And I have so many comments to what you guys have said. But let's start with Broadcom and Marvell. Their earnings were last week. Why we're seeing this, weakness compared to other chip names is because, yes, they have AI momentum with their custom chips, but they're still exposed to the rest of the cyclical chip market. And specifically with Marvell, they guided weaker for this April quarter. So that, dragged on the stock. For Broadcom, they reinstated their full year target. Many were expecting that to go higher. They didn't. Yeah, there was some hype about the custom chips, but that you still need to keep that in mind when you talk about the momentum argument, when many of these chip companies, AMD, for example, are exposed to other facets of the market. And I question the timeline, which was what you both brought up. With Nvidia, yes, they're launching their H200, their new B100, which is a completely new architecture for the GPU. They're talking about inferencing, which is 40% of their data center revenue, so that's going to help drive growth. But then you see a report from The Information just yesterday talking about Google, Microsoft, and Amazon warning that customers are cautious on their AI spending because they need to see that return. So I wonder in 6 months from now, if that return is not there, then those CapEx budgets get cut, and then that creates a different kind of momentum trade, or maybe less of a momentum.
Well, I think it creates at that point a reversal of the momentum for sure, and you're underscoring the element of why you've had this positive catalyst for all these semiconductors, because Microsoft, Alphabet, Amazon, they're sitting there, they're spending billions of dollars to build out the infrastructure, and they need these semiconductors to do it. And I'll go a little bit further. They need companies like Cadence and Synopsys as well.
But do they need that 2 years, 3 years from now? Constantly spending that amount?
That's a great question. And candidly,
so let me call a little baloney here, okay? So here's the deal. These big tech companies are spending all this money not for the next 6 months and what customers are going to do the next 6 months. They're spending this money for the next 16 years, okay? So these big tech companies, even if demand's not there in the short term, let's call it the next 6 to 12 months, it doesn't matter. They still got to spend a fortune because it is too big of a risk to them that if they don't, their competitors come and eat their lunch. And these guys see every single one of these big waves. You've got to spend up front. Cloud's a perfect example, right? Amazon was willing to get out there in front of everybody, and look it, they won the cloud market, right? They were willing to spend a ton of money before the cloud was the big thing and it was pouring in the big numbers, and they won the biggest market share, right? Look at Uber. Uber was willing to lose a fortune of money before everybody else is willing to lose a fortune of money, and they ended up with the biggest market share by far, right? And you can go industry by industry. You've got to spend the big money up front. You're gonna lose a lot of money on this particular segment, but the hope is you build a good enough product that you win long term, right? You look at what Meta's doing with Llama. They're going to continue to spend a fortune, even though in the short term, it's not going to bring them in money. This is Meta's playbook. They did that with Facebook. They did that with Instagram. They've done that with WhatsApp. WhatsApp, they're just finally getting around to monetization of WhatsApp now at this point in time. They do that with every business segment. They're going to do that. They're doing that obviously with the metaverse, which long term will probably pull them in a lot of money, but right now it's lost them a lot. And they're doing that with Llama model, which is attracting a ridiculous amount of developers. And so, that's an important thing to understand about this. They spend a fortune up front planning to lose money for years, not for months, not for quarters, for years. And then once you've built a big enough market share, 7 years, 10 years down the road, then the cash flow starts pouring in, and all of a sudden it's a game changer for your business forever. So, if any of them try to let their foot off the gas, they're going to get passed by their competitors, and then they're going to be screwed.
Yeah. I don't know that anyone really knows the answer to that. What's the length of this cycle? I think is the big question right now. And I think for people to come on the network and say, oh, I think it's going to be 6 months. I think it's going to be 3 years. I think they're just guessing.
But it's
I don't
impossible
think we know.
risk.
The
It's
stocks are not trading like,
No, you're right.
We've given the benefit of the doubt, so to speak, to almost everything.
These big chip cycles usually last 2 to 4 years. So, we're in year 2 now at this point in time. So the probability is it still lasts probably another year or two in terms of the big chip cycle, and then you start to see a slowdown, maybe toward the back half of 25, maybe toward the first half of 26. That sounds probable. The stocks are trading as if demand is sustainable forever. And if you just look at the charts, even from price to sales, bless you, for Nvidia, you really see this just uptick. And so you question, there's comparisons with Cisco back in the 90s. Can it keep up this trend? Well, if those big guys don't come through, yes, Nvidia will say, well, every other facet of the market, healthcare, auto, finance, they're all buying. But they're smaller players. They're not going to be spending, buying 200,000 GPUs, like, let's say.
Look at NXP. Isn't NXP's on the list.
NXPI is one of our holdings as well.
That's been one of those stocks that's been trading near a high. Jim Lebenthal just taking a little bit off the table the other day because like my chip exposure has gotten too big. It's making me a little nervous because the space has gone crazy.
Absolutely. And, I look at the performance of the semiconductors. We have 11% exposure, and I question, again, how long can this continue? My personal perspective is there's actually election risk surrounding the semiconductors. And I think there's big election risks surrounding the semiconductors. So that's probably one of my primary concerns from a fundamental aspect.
Well, there's not much concern on Wall Street because Broadcom reiterated to buy its price target $1,560, $1,560 for Broadcom. So, there continues to be all this bullish sentiment around these names. No one is, really willing to give up the ship on these yet.
No, and I think the challenge is that this is the first wave of AI, and people understand that if we go back to the .com bubble, the impact, the longer-term impact that we're still seeing through cloud optimization, for instance, of the internet itself, that is the likelihood that this trend could persist decades from now in terms of what it can do for the larger economy. The easiest way, the easy button for AI right now is chips. And so I think now you really have to take a step back and say from a fundamental perspective, to Christina's point, what companies are spending on AI that are actually going to be able to monetize that AI? You're going to have to show results a lot sooner than 2025. This is going to be a 2024 story for some of these companies. And I think that's where you could see money come off the table, not necessarily because the AI trend is not sustainable or defensible, but because there's better ways to catch this second wave.
Nvidia is going to remind us early next week exactly what their dominant role is, correct?
I'm going to be there. So it's in San Jose, and it's their big AI event, GTC.
Monday,
and
Tuesday.
This is the first live event in 5 years, and there's so much hype around it that they had to rent out the SAP's stadium. So there's way more people expected. Every hotel is booked. We're expecting comments on, of course, their new chips this year, collaborations with partnerships, how they're going to monetize software. That's a big one for them, right? Because it's the whole ecosystem, and that's going to be the reoccurring revenue. And then inferencing, which was a little bit of a surprise. The second stage of a large language model, that is driving 40% of their data center revenue. But inferencing is at a lower price point. And then you think of their new AI chips, the B100, that's expected to be 30% higher than their H100. So, margins may be improved, but demand may drop. There may be demand shifting towards the custom chips from Amazon, Microsoft, et cetera. So there's a lot of factors at play. Value. But normally, according to UBS, the stock tends to go anywhere between 5 to 6% higher post these events on Monday. This is on a 6-year average.
Yes.
So there's alternatives.
So quite simply, in regards to Nvidia, here's what's going to happen with this stock price, okay? Every single dip is going to be bought in Nvidia, and it's going to continue to be bought in Nvidia until there's a break in that business model and there's some sort of massive change in terms of numbers to the negative, and that might not happen this year. So for probably the remainder of this year, or at least most of this year, every single dip you get in that stock will end up being bought right up, and next thing you know, a week or two later, it's going to be at a new high, and then a new high, and new high, and then it'll keep going new high, then it will have some sort of dip. That dip will get bought up real quick, new high again. And so I think that's what's going to continue to play out with Nvidia in the short term. And when I say the short term, I'm talking over this next 6 to 9 months. Where Nvidia is 2 years from now, I think that's everybody's best guess. But in terms of next 6 to 9 months, every dip's going to continue to get bought because they're going to have a lot of new chips coming. H200 in the back half of this year. They're going to have that at a higher price point. Demand's still crazy for them and not slowing down. And then on top of that, software, right? And monetization of software side, I mean, gosh. Plus, new potential chips are going to show off. I mean, my goodness.
Nvidia as an investment manager, but is there true competition when you think about it? It's Nvidia and then everyone else.
100%.
Right. In the training process, no. I would say at the moment, no. But then in the inferencing stage, I do believe that there could be a lot more. And this is where maybe the technical side is not, the nerds in the chip world will say otherwise. But you have such specific tasks, and you can save a lot of money when you don't go for that giant expensive chip. So maybe I think that's where they'll lose a lot of the market share going forward. Right, but for now, first mover advantage. Right?
We'll look forward to seeing you out there Monday, Tuesday. Christina Partsinevelos, thanks for being here.
Alrighty, next one up here is TikTok situation. The House passes TikTok bill.
The analyst joins us this morning, has a new note looking at the impact of a TikTok ban, something we've been trying to work our way through as we kept our eyes on the Hill. Dan, what Well, I won't ask you to give the calculus on passage in the Senate, but let's pretend this goes through. What happens?
Look, it's a game of high-stakes poker because, first of all, there's a retaliatory in terms of China. What do they do with Apple, Tesla in terms of that? Is this eventually acquired by big tech? What could the valuation be? Call it $100 billion plus. But then we believe 25% chance that this ultimately passes, just given the regulatory spiderweb that we see. Clearly, Meta benefits and others. But look, we believe this is a slippery slope. It's a watershed moment. You are playing a little with fire going down this route. And we think this is, within the Beltway, it is you can't put the genie back in the bottle. And I think now we need to see how this all plays out over the coming weeks in this sort of 202 drama.
So would you be re-rating Meta, Snap higher or lower?
So we still believe here, based on all of our work in the Beltway and our advisors, 25% chance this ultimately passes. But with that said, it's incrementally positive for Meta, for Snap, for others. But I think we need to see how this all plays out over the coming weeks. But no doubt, if I go back
There's been a massive slowdown in TikTok in terms of downloads and things like that over the past few months. I'll see if I can airdrop this. Actually, let me go ahead and pull this up for you guys. I think it's important. I shared this in the Meta chat inside the my private group here. So TikTok's growth has collapsed in Q4 2023. 20-year-old Facebook grew faster than TikTok. Many young users have signed on to the short-form video app since the launch in 2016. Those core users are entering their 20s now, getting busier with other obligations, right? And so, here you can clearly see, geez, X had a tough run there, but you can see TikTok's in red. Yeah, it's literally below Facebook, which is crazy, and obviously getting way outpaced by YouTube, Instagram, and surprisingly Snapchat. So anyways, I think that is something that matters, right? At the end of the day, as a Meta shareholder, it really depends. If TikTok's not doing anything bad, and I don't know that all the back end of their systems and whatnot, if TikTok's not doing anything bad, I'd rather have them not get banned. I know a lot of businesses, personally, small businesses that really rely on TikTok heavily for their marketing machine. So
the fact that we're actually here in the House
and Meta's fine regardless if TikTok's around or not around. Meta's just fine. They don't need TikTok to be eliminated. I can tell you that much. Clearly, look at the numbers. They just don't, right? They're doing just fine with TikTok in the universe.
Given the pressure that we've seen, it's a surprise. And I think it's a surprise in Beijing. Look, I just got back from China. And in terms of overall Asia, and you see a lot of tensions that's rising. This is not what we want to see in Beijing.
So, what does this mean for the potential retaliatory measures that China could place here? If it's at least a near-term positive for a Meta or a Snap, but then China retaliates against U.S. tech, then what could that look like?
Well, and for Cook, for Musk, that's the issue here. Right. And as we've talked about a lot, right now it's not roses and rainbows for Apple and for Tesla in China. The retaliatory is what you worry about here. Not for Meta and others, but specifically for Apple and for Tesla. And that's why we say you're playing with fire. And this game of high-stakes poker, it's great for grandstanding here, but not just from a First Amendment perspective, it could have massive implications from a retaliatory in what's already in terms of that U.S.-China Cold Tech war.
Yeah, I brought this up yesterday. True. How would we react if China decided, Tesla, you've got to divest your operations in China to BYD? We would not react well to that. That said, it's very much unclear, Dan, I should just point out from my own reporting, that there's any chance the Chinese would allow ByteDance to sell TikTok to another company, including the source code and the algorithm. That's not going to happen. And so it's very hard to figure out what will happen here. Before we let you go, though, I wanted to actually come back to Tesla and just have you respond to this Wells Fargo note today, questioning, obviously, significant discounts, profit per car coming way down, and their price target at Wells now, I think, 125.
Yeah, we strongly disagree with them. Obviously, we respect the analysts and the call, but I think right now overly negatively discounted in terms of the Tesla story. Look, near term, clearly units are going to be soft for 1Q. Just getting back from the region, I believe price cuts are now starting to subside in China. That's important. I think when you look through the next 6-9 months, we're going to look at this as more of a golden buying opportunity for Tesla over the next 2-3 years, especially with AI, rather than time to throw in the white towel. But for now, we all know. I mean, the New York City cab driver is bearish on Tesla here.
What does that mean? Sorry.
Everyone's bearish. The piling on's there. The bears are coming out of hibernation mode. I get it.
See what you mean, yeah.
But we believe now is not time throwing the towel on Tesla and Apple. I think we sit here 6-9 months now. Stock's much higher.
And like I said, in regards to Tesla, I think what's going to happen here is you're going to see margins trough either in this current quarter we're in or next quarter. And from there, the back half of the year, you're actually going to see margins start to tick up, which I think is going to be huge. And I mean, absolutely huge for Tesla stock when those margins, you finally start seeing them come starting to go up. Just in that direction is going to be very, very positive. But in this quarter that's reported, in the next quarter, I think those will be very tough margin quarters. But back half of the year, I think we're looking pretty dang good. Okay, appreciate y'all joining me as always. Thanks so much for being here. If you're looking to apply to join my private group, check out the pinned comment down there. Much love and have a great day.